You run recruiting for a startup that just went public. With all your IPO riches, you need to hire. You've identified a top Harvard candidate, and it's pretty damn competitive out there. Thankfully, your bank has partnered with a virtual card provider that makes paying expenses easy for both you and your prospect. You send the Harvard woman a virtual credit card via a simple app to pay for her Boston flight and other expenses. She thinks it's pretty cool. She can load it into her own apps, including Uber. You love it. Not only do you get real-time spend visibility, but you also get total control. Modify the expiration date. Update the expense limits. Make certain that you export the transactions into your accounting software. What's more, you can capture 100% of the spend to maximize the volume discounts and rebates. Your bank, well, they love it. It boosts their card revenues, and it builds customer loyalty. The company is called Extend, a virtual card platform that partners with banks and instantly integrates with their systems. Street cred. They are MasterCard and Visa certified. So it's my pleasure to introduce Andrew Jamison, the CEO. He knows a thing or two about this space, given his 12 years managing B2B payments at Amex. Andrew Jamison, stage is yours.
Thank you very much, Neil, and good morning to you all. I'm Andrew Jamison. I'm the CEO and one of 3 co-founders behind Extend. So what is Extend? Well, Extend is a platform that is enabling digital card distribution or real-time issuance of credit cards and card controls for banks to be able to then give that to their customers. Who are we? Well, we are supported by industry veterans, but just as importantly, we come from years of experience in the credit card industry and also from building high-end consumer brands, really about intuitive solutions. What are we trying to solve? Well, what Neil just alluded to was just one of the many challenges that customers are facing. Why? Because the workforce is rapidly changing. There will be 50 million gig economy workers, freelancers, contractors in the US next year. And yet, it's incredibly hard for many of these individuals to pay for things that they need in order to get their job done on a daily basis. And that is the challenge that we're here to solve for. The opportunity in itself in the US is over $400 billion. So $400 billion today goes on people's personal cards. Personal cards, yet they're actually doing business transactions. And as Neil just mentioned, it means foregone opportunities for banks in terms of revenues, but also in terms of rewards and incentives for these customers. And it stretches beyond just interviews, right? It also goes all the way through to operations of these companies. Think of even airlines today. When a flight is disrupted and passengers are disrupted, think of today of how you essentially get those vouchers. It's about digitizing that journey and enabling, therefore, those stranded passengers to be able to go and buy food and meals and different things that they need in order to carry on with their day. It's not as if banks haven't tried to innovate in this space. They have. But what is the real challenge is they're anchored by platforms that are 30 or 40 years old, right? This looks like the green screen of death, except this is what they work with. These are platforms like TSYS, FIS, which, don't get me wrong, they are hugely scalable and extremely efficient platforms, but they have been customized over that long period of time. And what it means is innovation is really hard to come by. So what we've gone and solved for is created a platform that sits neatly over the top of them. Thanks to our integrations with the networks, it means commercial banks don't actually have to do any technology work, and nor do the end customers. So rather than talk about it, I thought the easiest thing to do is actually to give you a quick insight into how the solution works. What you have here is 2 different users. The user on the left-hand side has been enabled with a card account inside of Extend. The user on the right-hand side is a freelancer that may need to travel to a conference. The experience we've created really is inspired by Venmo. Simple. Enter a few data fields like an email address, the amount that you actually want to provision them with. Again, we're not moving money. We're moving access to credit. And that's it. A simple click of a button and a card number appears for the user on the right-hand side that they can instantly use, hence the instant issuance. Better still, we've created capabilities on top of it, controls. If they have to stay an extra night, they're able to then go and input data and say, I need an extra few $1,000s, and that kicks off a workflow that the person can go and approve, change, or actually deny. Better still, the card account holder actually has always control. They can cancel that account, deactivate it, reactivate it, as and when they actually want. So what traction have we had over the course of the last 2 years since our inception? Well, our first year was spent integrating into the networks, Visa, MasterCard, and a third one we can't publicly announce here, but it's a pretty big one. Importantly, what we've been doing over the course of the last 6 months is now getting up and running with banks. We're up and running with 4 banks. We're well on our way to having 15 banks by this time next year. Just as importantly, 3 of the top 6 commercial issuers here in the US have given us a verbal agreement. Now, none of this would have been possible without the types of relationships that we're developing through labs like the FinTech Innovation Lab here in New York. They drive our relationships, they drive our entrenchment, and again, they've also helped us as it relates to raising capital. We're proud to say that we closed our Series A at the end of March, taking our total funding to 14 million. So thank you to all of you who've supported us along the way, and I'm very much looking forward to engage with many of you on the back of today. Thank you.